Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, August 12th, 2025. Let's take a look at the charts. I'm going to mention once again the 351.39 to 358.04 area as a price ceiling on the weekly chart that, if settled above, would then indicate longer-term upward continuation. I don't know by the end of the year anymore. We're now kind of closing in on September, so you've got, 4 months. I don't see that happening in 4 months. I mean, if history repeats, it could be within 4 months. I just don't see that kind of volatility returning on this buy signal if it were to occur above 358.04. I think it's a half year. It could spill into later Q1. But anyway, you slice it or dice it, closing above 358.04 at the end of a week is a go-long near-term investment. It's a buy and hold as we continue through the rest of the year, if that is a time frame. Now, you might have, I know a lot of you are spec traders, 3 to 5 day, 3 to 5 week swing traders, for instance, and that's not necessarily who I'm talking to, but I could be talking to you. You may actually have a portion of your portfolio or another account that actually is devoted to more kind of the investment side of things, and that would be the place to put that if we were to close above 358.04. Until then, this is still sellable resistance. And in fact, we tested an objective that we outlined about a week ago when we closed back above this trend line at 321.76, and that is to say 345.62. If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time. You can lop 345.62 into the 358.04 area. This is about a 4% difference in the underlying value of Tesla. So, if you're selling 345.62 and you're stopping out above 358.04 because of the strength that would likely incur, if that is all, if you're 100%, in that trade, if your trading account is 100% into Tesla and you sell 345.62, you're taking a 4% risk on one trade, and that's just too much. But if it's more like, 50% or 10% of your total trading account is devoted to that trade, now you're talking into the less than 1% potentially. And that's the kind of risk management that I like to employ. So, if you're selling 345.62 and you want to stop out of that trade above 358.04, that's fine. It's just my recommendation would be to keep your allocation reduced to under 50% of your total trading capital. But I don't want to get too involved in that. My job is to present the technicals. And so, if you're more of a kind of a day trader, for instance, and we were to say open above 355.62, that is a buy signal right out of the gates that should within the day reach into the, the 351.39 to 358.04 area. So it depends on your perspective and how you like to trade. But if you're looking at a swing trade, for instance, that could play out over the next 2 to 3 weeks, maybe you are short now, because that's what we've been recommending at that 345.62 formation, was to take profits on a 3 to 5 day swing trade that you may have bought when we settled back above the 321.76 trend line, taking profits at 345.62 and perhaps going short. Now, going short could mean a 2 to 3 week short play back to what is now a channel bottom that is very in close proximity to this trend line on the weekly chart at 304.33. So let me rephrase that holding below 345.62, if you're short the market now at that level or you want to sell that level, you can hold out 2 to 3 week swing traders for 304.33. That number may change a bit over time as we begin to more emphasize the channel bottom rather than that simple trend line off the weekly lows. I think that'll be a more accurate support area and a more accurate downward pivot point if we were to close below this channel bottom that is now in the 302 area roughly. So back to the day itself, 331.09, this former channel top can contain intraday selling pressures. I would keep it light here, though I do think there is a real susceptibility now to falling away from 345.62, possibly over the next few days, 3 to 5 days, back to 321.76. And as I've already said, over the next 2 to 3 weeks into the low 300s, 304.33. That is the 3 to 5 day, and that is the 2 to 3 week dynamic. Selling 345.62, 3 to 5 day swing traders back into the low 320s, selling 345.62, 2 to 3 week swing traders back into the 304.33 area, roughly. So upside, what if we close above 345.62? And I'm not talking 345.63. I'm talking kind of a comfortable distance. Yesterday's high was 346.64. And I don't even have it shown here as a point, but let's say that we close today, Tuesday, above 346.64. That could be, as I've been saying, the early indication of the buy signal that may then play out on Friday with a settlement above 358.04. So what am I saying? I'm not exactly sure what I'm saying. What I'm saying is, as I mentioned before, if you're a 3 to 5 week swing trader, you can sell into that entire range. And then obviously you're stopping out above 358.04. But, if you're more of a 3 to 5 day swing trader, or maybe if you're a 3 to 5 week swing trader and we close about 345.62 comfortably, you could delicately and gradually play the long side. You could scale into a long position. Obviously, then you'd be all in, if you will, with a Friday settlement above 358.04. So there's always more than one way to trade these technicals, and there's no right answer. Actually, it comes down to your time horizon, your trading style, what you're comfortable with. And so I kind of leave it to you because, there's no way I can pigeonhole you into what I think you should do. There are 3 elements to successful trading. And, one of them is what I present every day, the analysis. Whether that's technical or fundamental, it is the analysis. The other is the trading psychology, your temperament, what trader type, mindset are you, generally speaking? Are you the more aggressive gambler, or are you more the methodical, academic, if you will, swing trader who's just kind of waiting patiently for your opportunity? There's no right way to be in that either. And then finally, what I think is the most important part to successful trading is risk management and combining your risk management with proper trade execution. And I could go deep in the weeds on that one, but bottom line on that, I would never risk more than 2% of my overall trading capital on any given trade. And that is actually a rule of thumb that many institutions will follow as well. Some don't, to their own long-term detriment. And those are oftentimes the funds that just sort of wither away and go belly up. And so, if you're willing to risk 5 or 10% on any particular endeavor, you're a few losing trades away from having a very bad year. So anyway, enough of the preaching. I'm wondering if there's anything else I need to say, and I really don't think so. I am going to, anything I say at this point will be a repeat, so I'm just going to leave it at that. For Tuesday. I'm not even going to do the commercial on wickedstocks.com. How's that? That we'll do tomorrow after the Tuesday stock pick comes out. I'll talk to you soon. You have a great day.